So in today's video, we are going to be talking about position sizing, how to calculate pips. One of my subscriber asked me a question in the comment box that I should do a video pertaining to position sizing, how to calculate pips, stop loss, take profit, and so on and so forth. And so that is why I decided to make this video, so that the person that asked this question will get to understand how the position sizing and pips work in the forex market. Remember that in forex market you have to understand your risk management. That is why every broker has a disclamation, right, saying forex trading comes with enough risk. It comes with severe risk. So therefore, do not risk more than what you cannot afford to lose, right? Remember that forex trading is all about probability. Nobody is 100% sure, right? Everything about forex trading is all about probability. So the only thing you need is technical analysis to increase your probability. But that is why it is always advisable never to risk more than what you cannot afford to lose. That is why it is very important that you understand your risk management whenever you are trading the forex market. So in this video, we are going to talk about risk management, how to calculate your pips, and also how to calculate your take profit, so that you understand how this thing works. So ladies and gentlemen, you're once again welcome to my channel. I still remain my humble self, Austin Ikeru, and you all are welcome to my channel, Austino FS. In this channel, I talk about forex trading and various ways to trade the forex market. I've been in this business for almost 8 years and I've been trading gold. So I have all the knowledge to share with you guys for you to learn and become profitable in the forex market. So we are talking about position sizing and how to calculate your pips, so that you know how to take the right risk. Now in my videos, I normally advise you not to risk more than 1 or 2% of your entire capital, right? So how do you know? You do that by calculating your risk using the FS calculator. Some of you doesn't know about the FS calculator, right? This is an app, or you can also see it in a desktop version, where you can calculate your position so that you know the right position that you are using. Remember that forex trading is all about money management. You use money to make money, right? You use money to make money. So don't go and gamble away your money because you want to become an instant millionaire. Remember that forex business is all about compounding, right? You use small money and then you grow it into big money. That is how the forex market works. You don't come into the market and expect to make 100% of your capital in a month. It is impossible, right? So you need to learn risk management. It is extremely important, because your risk management will help your psychology. It will help your mental score. It will help you as a trader, because you are risking what you can afford to lose. And bear it in mind that you use money to make money in the forex market, and if your money gets finished, there is no other money for you to trade. You'll be left with no choice but to stay away from trading, right? So it is always advisable that you use what you have, right, to gain what you want, right? So when we talk about position sizing, it has to do with the available pips that you need to risk, the lot size that you are expected to take pertaining to your capital, right? You don't expect to take the same lot size that someone who has over 1 million capital is taking. So you take your your lot size based on your capital, right? So, and you are advising yourself that you don't want to risk more than 1 or 2% of your capital, right? So that you can last long in the forex market. So now we are going to head straight, and let me show you how you can calculate your pips using the forex calculator. The first thing you need to do is to head on to my forex book or my FS book, my fsbook.com. So let's go there. Okay, now you have opened my FS book, right? This is my FS book. So after opening my fsbook.com, you simply go to once you have opened my fsbook.com, you simply go to FS calculator. Remember that you can also use my FS book to read news, right? You can get news on my FS book, and also you can check economic calendar, right? So that you know when to trade and when not to trade. So we are talking about calculating pips, so we'll focus on that for now. So you click on FS calculator. So once it has opened, you go straight to position size calculator. You click it, right? Now this is the position size calculator. So now if you want to calculate how much you are going to risk per trade, what you have to do is to look at your currency pair. What pair are you trading? Is it currency, commodity, or crypto? So let's assume you are trading currency pair and you are making use of Euro USD. So the currency pair is already there. So the conversion of the currency is USD, that is US dollars, right? And it's already there. So now this account size is your total capital. The total capital in your trading account, the total money you have in your trading account. So let's assume you have $1,000. Let's assume you have $1,000 as your capital. Now we are going to change this to swap with money. This risk ratio, we change it to swap with money, right? Good. Now what is the amount of money you want to risk in this particular trade? That is the money USD. You are going to write down the amount of money you want to risk in this trade. Remember, your capital is $1,000. So how much do you want to risk per trade? So let's say you want to risk $10. You want to risk $10 per trade. Now what is your stop loss, right? What is your stop loss? How many pips do you want to risk as your stop loss? So let's say you want to risk like 40 pips, right? Now what is your trade size? That is the lot size you want to use. What is the lot size you want to use? So let's assume you want to use 0.5. No, let's say 0.05. You want to use 0.05 lot size. Now let's do the calculating. You simply click calculator, right? So now you will see that what you are risking is 1% of your entire capital, right? And you are trading 2,500 units, but you are risking 1% of your capital. So if you are trading with 0.05, that means you are doing the right thing. You are risking just $10, meaning it's going to take you 100 times for you to lose your account. So this is how it works. Let me show you another example. Let's say, for instance, you are making use of gold. Okay, let's assume you are making use of gold. Now this is currency pair gold and the currency account USD. Now let's assume you have $10,000 as your capital, right? You have $10,000 as your capital, and you want to risk some percent of this capital for you to make profit. So let's assume you want to risk like $100. you want to risk $100 in this your $10,000 account. So you want to use 40 pips, right, as your number of pips for your stop loss. You want to use 40 pips for your number of pips as your stop loss, right? So stop loss is going to be 40 pips. Now trade size, that is the lot size you want to use for that account. So let's assume you want to use 0.10 lot size. Let's assume you want to use 0.10 lot size. Now you simply do the calculation. Now this is the result. You are risking 1% of your entire capital. So what it means that once you are using $100, you are risking 1% of your entire capital. Do you understand how this works? So when you watch, you see that what you are using here is 1% of your entire capital, right? So that is why it is always important that you know how to calculate your pips so that you know what you are risking in the forex market. Don't risk more than what you cannot afford to lose. Like I said, if you have $10,000 in your trading account, don't risk more than $100. If you have $100,000 in your trading account, don't risk more than $1,000 in a trade. And if you have $1,000 in your trading account, don't lose more than $10 in a trade, right? So this is how it works. You use money to make money. So in trading, you don't need to be greedy. Maybe you are seeing someone that is using a bigger lot size, like 50 lot size. You don't know what that person has as his capital, and you want to do the same thing that person is doing, right? Just one or two movement, you just end up losing that account. So you use lot size based on your capital, right? So that is why this position size calculator is there for you to know the percentage of money you are risking per trade, right? Based on the examples that I've showed you here on the position size calculator, it tells you the percentage of the amount of money you are going to be risking per trade. So that is why risk management is very important in forex trading, because you want to minimize your risk. You don't want to lose so much money so that you start regretting it, right? So let me just be sincere to you. If you want to last long, in the forex market, you should master money management, risk management. That is the only way you can last long in the forex market. So don't risk more than 1% or 2% of your entire capital. No matter the strategy that you are using, even if you are using the best strategy in the world, do not risk more than 1% or 2% of your entire capital. Just take a small portion from your capital and trade the forex market, right? And you see yourself compounding your capital, making more money instead of risking more money. You use small money to make big money. You don't use big money to make big money. You use small money to make big money. So that is where risk reward ratio comes in. So now that you are risking 1% or 2% of your capital, what are you aiming to gain? You are aiming to gain at least 3% or 4% from that trade. So that if you risk 1%, you are aiming to earn 3%. If you risk 2%, you are aiming to earn 6%, right? So you risk lesser and target higher. This is how it works. So without, you will be making money consistently if you have the best strategy that is working for you. So what I'm advising you is never you neglect risk management in trading. It is very important. Never you neglect risk management in trading. It is very important. So that is all I have for you, ladies and gentlemen. I will see you again in my next update. If you love this video, give us a thumbs up. Don't forget to subscribe to my channel for more educative content like this. I will see you again in my next update. Bye.